Welcome ADK community and financial planning world. Dan Davis coming to you from St. Louis Metro, having our Q3 market update. Really, if I were going to sort of summarize things, I'd say to me the most important stuff is what's going on with the economy and the equity markets, what's happening with communist China and Asia, and then there's a third topic which is more what I'll call alt energy macro trends. So let's sort of take them in that order. The economy, as you heard me say before, the economy drives the financial markets. And so we have entered into what I call the mid stage of the economic run. In the mid stage, what's very typical is you have good equity returns, but you get really choppiness to it. And so there's a lot of headline news that'll cause concern. The key thing is not to do anything rash where you're reacting to that, but rather ride through it. Believe that you'll see good returns, but that you're going to have some periods that make you feel like you're on that roller coaster that's coming down. It's very normal in midstream that you'll see 5 to 7% pullbacks. It's also not abnormal to see 15 to 20% pullbacks. We expect those. We won't really do much when those happen other than just think of them as a thunderstorm. As you know, late in an economic cycle, we start thinking about hurricanes. We don't see that on the horizon. Earnings have been very good. In conversations with clients, I hear people talk about when's the bubble going to burst. In my view, in the U.S. equity markets, there's not a bubble. We're trading at premiums. The premiums are justified based on what's happening with interest rates being so low and with corporate earnings doing as well as they are. Actually, PE's valuations have come down as earnings have gone up, so that's good. The expectation on bonds is no different than what we've talked about, that we expect yields to stay low but be rising, and that means that they're not going to do that great. So we've done the moves that we think need to be made to deal with that part of the portfolio, so I won't touch on that. Communist China, that's probably the biggest head scratcher. As you heard us talk about in our China video several years ago, they had too much debt, and you're going to see companies go bankrupt there. We're seeing Evergrande right now experiencing that. You heard me say before that the good communists will get bailed out, the bad communists won't. In this particular case, it's hard to say how they're going to respond. They're not going to allow this to become a systematic type of flow out that crushes their economy, but I don't actually see them stepping in and intervening in some way that bails them out either. All pure speculation on my part. As you know, investing involves a lot of risks. Nothing that we own for you had any position in that holding. However, if you take a look at the biggest drag on our portfolios for you, it's the emerging market equities, and that's driven by communist China flexing their muscle to get more control, dealing with the parts of the economy where those entrepreneurs and capitalists have gained control and power. They're trying to minimize that, and that's going to go on for a while. We haven't decreased our emerging market exposure as a result of it, because we're very bullish midterm and long term, even though short term it's been brutal. We haven't tried to exit and re-enter because I just don't think that's able to be done in the midst of this kind of stuff effectively. We will be increasing that position when we feel like the bottom has been hit. So far, the technical research has not indicated that at all. Again, even when we make that decision, investing involves risk, so we won't know for sure till we look back on it. If I were going to say what's the most interesting thing we're looking at right now, it's alternative energy. If you think about macro trends, so a macro trend is something that is a game changer for a long period of time. IT was that macro trend that we're now seeing huge harvest of fruit from. I believe that the alternative energy macro trend won't be nearly that robust, but I believe that it's still very, very powerful. I believe that we're already through the first major phase of it, and now we're in the second phase. And so what we're looking at is whether or not it's wind, solar, you name it. The key is once the energy is generated, how do you disperse it out? And batteries are really a central hub of that. And so battery technology is what we're really going to be focused in on in this next wave of investing. And so one of the investments that we're looking at deals with the entire supply chain, from the mining of things like lithium, magnesium, cobalt, to the converting of those elements into chemicals that can be used in manufacturing, to the battery manufacturing, to the end users. It's interesting to see end users like Tesla, LG, Life's Good, your TVs, Samsung, Panasonic, those end users. It's also interesting to see how involved they are in battery making. So alternative energy, we believe that it's time to be investing in. You'll see it in your portfolio in the coming months. We'll start off slow and build positions over time. So wrapping it all up in a nutshell, we expect positive equity returns with a lot of choppiness. Earnings are good, they're supporting it. Asia's getting battered because of communist nonsense and control. If I ever run for politics, I hope this video gets used and the communists realize that capitalism and communism are hard to mesh together. But that's a whole other story over red wine. Didn't own any Evergrande, that's positive, and battery technology is something we'll be entering into within the portfolios. Thank you very much for your trust. We'll be signing off from St. Louis, saying again, thank you and have a great day.